Top 10 Financial New Year's Resolutions. Hello everyone, and welcome to our channel. We're in the first month of the year, and many of us are still planning our New Year's resolutions to kick off the new year successfully. Many people start the year with goals to revamp their gym routine, save money, or improve their diets. While we aren't here to help you go to the gym or alter your diet, we are here to help you save money and spend smarter in 2023. Here are our top 10 financial New Year's resolutions that will get your new year off to a strong financial start. The first resolution you should have this year is to develop a monthly schedule to maximize credit card rewards. Certain well-known credit cards offer rewards that normally change every quarter. So, if you have multiple credit cards, activate them all and keep track of the cards that provide a reward using an Excel spreadsheet or another monitoring system. Keeping track of this in one place can be easier with a clear spending strategy. If you share your finances with a partner, ensure you both have access to the spending plan to maximize its advantages and effectiveness even more. The next financial resolution we suggest you have is improving your credit score. Having a good credit score can help you qualify for better rates on loans and credit cards. And that's not all. A good credit score can also mean lower insurance premiums. Your credit score is one of many variables insurance companies use when determining their risk of insuring you. This is justified by the idea that a person's credit score is an indicator of their financial stability and financial accountability. Higher credit scores are generally associated with greater responsibility and a decreased tendency to file claims. Insurance companies often charge individuals with higher credit scores lower insurance rates because they are more likely to pay their bills on time, stay out of debt, and have a lower chance of declaring bankruptcy. So always review your credit report and take steps to improve your score. This can be done in many ways, including paying your bills on time, reducing your credit card debts, avoiding opening new lines of credit, and disputing errors on your report. Making your money work for you is the third resolution for your list. If you can't or don't want to invest right now, that's fine. However, this does not imply that your money should just be left to gather dust in a low to no interest checking account. High interest savings accounts can significantly affect how much money you can save over time. The default savings account you received when you opened your first checking account in high school isn't doing you any favors. It's crucial to recognize that not all savings accounts are created equal. And here comes the miracle of compounding. Think of compound interest as the icing on top of the high-interest account cupcake. Your money can grow exponentially over time with compound interest. Instead of earning interest only in the initial amount of money you invest, compound interest allows you to earn interest on both the initial amount and the interest accumulated over time. Here's an example to help explain how compound interest works. Imagine investing $1,000 in a savings account with a 5% annual interest rate. After the first year, you would earn $50 in interest. So that's 1,000 times 0.05 equals $50. If you leave that interest in the account and don't withdraw it, the following year, you would earn interest on the original $1,000 and the $50 of interest you earned in the first year. Now, your $1,000 has grown to $1,050, and you would earn $52.50 in interest in the second year. So that's 1,050 times 0.05 equals $52.50. This process continues every year, and over time, the interest you earned on the interest you've already earned causes your money to grow at an increasingly faster rate. The fourth financial New Year's resolution we suggest you have is this: examine your insurance at least each quarter. Make sure you have at least the minimum required insurance coverage. You need to be confident that you will be protected from fines and steep out-of-pocket fees in the event of an accident. Once you know you had the right coverage and enough coverage, make sure you aren't spending too much money on your insurance. Shop around, compare providers, and get a few quotes online. FreeAdvice.com will give you free insurance quotes that pop up on your screen. It's very easy. Just type in your zip code and answer a few questions. Then you can see a range of prices and know if you need to find a more affordable provider. Do you qualify for Medicare? Be sure to compare prices during open enrollment. Get the help you need from experts at FreeAdvice.com to ensure you receive the coverage you need at the best price. Once you find the best provider and policy, check up on your insurance coverage every 2 to 3 months. Confirm you're still getting the best deal and coverage for your needs. We suggest you compare at least 3 insurance providers when you shop for a new policy or company. Also, an important tip: to avoid coverage gaps, always wait until your new policy has started before canceling your old one. Consider reevaluating your debts is our 5th New Year resolution for you to have this year. Be sure to check that your repayment strategy still supports your goals. This can entail coming up with a strategy to pay off your debt more quickly or looking into refinancing possibilities. You can browse and discover that refinancing at a cheaper interest rate could ultimately save you a few $1,000s. Just bear in mind that when you refinance a loan, the previous one ends and a new one is created. For example, if your student loan was the oldest credit on your credit record, this could have a short-term negative impact on your credit score when you applied for new credit. Another thing to keep in mind for those with student loans: there have been many changes in requirements recently. Be sure to see your payback requirements and start with your highest interest loans. Make sure the money you pay back each month goes to the debts that need to be paid off first. Having a solid payback plan is essential to your financial success in 2023. The 6th New Year's resolution you should have for 2023 is to consolidate your debt to obtain a lower interest rate. Many people desire to start the new year by paying off their credit card debt. Debt consolidation combines a number of debts, mostly high-interest debt like credit card bills, into a single payment. If you can acquire a reduced interest rate, this is an excellent alternative to take into account, as it will help you plan your spending and help you pay off your debt more quickly. Paying off debt comes in at resolution number 7 for your list. We briefly discussed credit card debt and student loan debt, but in general, developing and implementing a debt repayment plan should be your top financial goal. So, consolidation was stated earlier, but there are additional strategies as well. The debt snowball and avalanche are 2 of the most well-known debt repayment strategies. The snowball strategy requires you to pay off the smallest debt first, and by creating positive momentum, it might inspire you to keep going. With avalanche, you pay off the loan with the highest interest rate first, reducing the amount of interest that accrues over time and enabling you to owe less. It's important to pay the least amount owed on all of your obligations for both of these tactics, so choosing where to put the balance is merely a matter of preference. Never forget the importance of planning. Having a financial plan will assist you in creating a budget and accelerating your debt repayment. And which approach you think is appropriate for you will depend on your objectives and financial conditions. Another financial resolution you should commit to this year is to learn more about personal finance. Take the time to learn personal finance tips, whether it's by reading books, listening to podcasts, or taking a class. The more you know about personal finance, the better equipped you'll be to make smart financial decisions and wise investments for the rest of your life. Resolution number 9 is to evaluate your subscriptions and memberships. Take a look at the current subscriptions and memberships and see which ones you are using and which ones you can cancel or put on hold. That way, you are not only becoming intentional with your spending by making choices that align with your values and goals, but also saving money in the long run. And that brings us to the 10th financial resolution to kick off your year. Stick to your budget. Budgeting is still one of the most important steps in building financial stability. But no amount of budgeting will do any good if you don't follow it. Sticking to the budget you set and readjusting as needed is the key to making a solid budget work. Again, make adjustments as necessary, but try to stay within your allocated spending plan. Before you start, make sure you do the following. Find out what your net income is. Know what your fixed expenses are. Determine your varied expenses. Compare your income and expenses. And regularly evaluate the budget. Regardless of its significance, many people in the world of budgeting need to pay attention to this last step. You can't just create a budget, forget about it, and hope it will work for you. You'll need to review and update it periodically. If your finances, spending, or other situations change, your budget will need to change too. Now that the spending holiday season is over, it's a perfect opportunity to consider what you did well the previous year and what you could do better when it comes to spending and budgeting this year. I hope these 10 financial New Year's resolutions are helpful to you. We suggest you write down this list and develop a plan for 2023. Even if you just pick one of the financial resolutions we shared, we have confidence it will make a difference for you this year and for years to come. How do you envision your finances will be in 5 years? What changes do you need to make? What do you envision for your family? Set some goals and then work hard to achieve them. We suggest you use the S.M.A.R.T template when creating your financial goals. Specific. Try to include set financial figures in your goals. Measurable. Every goal should be measurable and quantifiable. Attainable. Make sure you can accomplish your goals in a specific period of time. Relevant. Your financial goals should align with your moral principles and overall goals for your life. Time limited. Setting a deadline will help you stay on track and will add a little pressure. Keep that SMART strategy in mind as you set your New Year's resolutions. What are you waiting for? It's time to make this your best year yet. We would love to hear your New Year's resolutions. Which ones do you have that we didn't mention above? Please share them in the comment section below. Happy New Year! See you in our next video.